Our biggest thing is just they have the trust in initial phases, and this is where we are in ours. It's the trust of them to invest in our fund, and I don't know how, without working with people for years, you can have that. And again, maybe that's what you guys do a little better. Maybe we could talk offline to see that part, but these are guys that we've been working with on the brokerage side for years and years and have years and years of relationships and unwinding and going over there. We lived over there for 3 months in France, to where most of our investors were, met with all of them. So that was a challenge that we overcame. And so I would be curious how to scale when you talk about scaling, to that next level, to foreigners that really, without a relationship, I don't even know how that's possible, because we like to have a relationship with all of our people.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Terry Yonker brings a wealth of experience and industry-specific knowledge to every new venture, whether he's facilitating deals or bringing innovative programs to the market. He currently serves as the lead broker for Buckeye Realty, and even more fun, they are working with foreign investors to bring foreign investors here into the United States real estate market. Terry, welcome to the show.
Thank you. Glad to be here.
Hey, man, the pleasure's mine. Same 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
Where we started, I was in a small town of Punta Gorda, Florida, Southwest Florida. Loved the lifestyle, but couldn't figure out how to make any money, because it was a small thing. This is before remote work. Now remote work is like a piece of cake, but back then you couldn't do it. So started getting into residential real estate. That was about 18 years ago. Since then, morphed into commercial, on the commercial side of the business. My wife and daughter, we've since moved to Orlando. We're here in downtown Orlando right now, and just moved into the larger markets, larger products, and but still have kept some of that same core from 18 years ago in Southwest Florida. So it's been a great ride.
That's really, really intriguing. So you guys moved, more into the brokerage side of things in the commercial space. Did I follow that correctly?
Correct. Yes.
Okay.
In those small towns, it's like some of your residential people and your chamber of commerce people are the same guys that own the commercial buildings. So, as opposed in the big city here in Orlando, a lot of guys are niched out. But what we found in a small town, when you're on the chamber of commerce and these are your guys, and whatever they need, or gals, and whatever they need.
Right. Talk to us about launching a brokerage firm, and then why did you ultimately end up deciding to get into the fund model and bringing foreign investors? What's the story behind even the iterations of those ideas?
Oddly enough, is just when I was being just a regular broker for land, I ran into some French guys in Southwest Florida, and they came in, and that's one of my languages is French, and there weren't many in Punta Gorda that spoke French at that time. So they came in thinking that they had a great deal, and what I discovered is that there was a French guy in the United States buying lots for like $5,000, selling it to them for about $50,000, telling them what a great deal it was. So as we unpeeled that onion, there were hundreds and hundreds of people that got taken like that. So after I unwound them, and a lot of them had lost, but we unwound them, and we had to move into a model of how can we have them come in and invest rather than taking it in their names. Tim, these people were losing a lot. They know about taxes. They know about HOAs. They didn't know about all the things that we take as second nature, and they were losing their lots to taxes. So what we started doing is assembling them and saying, hey, there's got to be a better model. So we first started with their LLCs, and basically I was managing like a whole bunch of LLCs for them. Again, a little bit inefficient, and I was, there's a lot of, how can I say, fiduciary duty for them. They trusted me like a brother at that point. And then, so that's how we started exploring this fund model and syndication, because that's built, as like you guys do, it's built for that, where they can come in, as a limited partner. And so that's how we've evolved, just out of necessity, to be honest, because at one point I could only handle so many, Florida LLCs owned by these foreigners, and I have a statement of authority, and there's just chaos. So the model now is a lot cleaner and tighter.
Yeah, that's intriguing. So you had all these people with all these properties tied up in LLCs. They weren't doing the right things with them. And you said, hey, look, I can help you straighten all this out. And then eventually said, you know what, bag it. We're not doing this anymore. Did you guys have them? I don't even know how that would work. How did you end up not, let me ask a better question. How did you end up not managing, continuing that management of all the LLCs, or did you just finally say, hey guys, I can't help you anymore. Good luck?
Well, no, I did the opposite of that, because they had stuff, as I discovered, in Detroit, Vegas. I mean, it was chaos. So we started just unwinding them from all these pieces and then maintain their LLC here in Florida, this foreign owned LLC, which then becomes the investor into the fund or the syndication. And so that's kind of how we and some didn't, some had it in their own name and they have to pay FERPTA, which is 50% and do all those things. And they got burned and they don't come back in, but fair enough. But we have a good pool of the people that still wanted to, especially with what's going on now where you can't get across borders or you have a hard time with the COVID lockdowns and everything. I think they appreciate having an American here that they can trust doing that stuff is more valuable. I mean, it's always been valuable, but I think it's more valuable now than ever.
Right. Yeah, absolutely. What is your fund investing in now?
It's master leases for vacation rentals here in Orlando. So we work primarily with a company called Sonder, but there are a handful of other ones. Well, they'll do a master lease for 50, 80 units for 5 to 7 years. We provide the product. They do a master lease, and then they try to make a spread, from the fixed fee that they're paying us to what they can get on the vacation rental market. And it's pretty standard. We're copying it. It's not anything necessarily revolutionary, but we're just dabbling into it and putting it together, so we're trying to do a copycat model on what's already working.
Let's dig into the master lease. So there's a company, this company then goes out to property owners and says, hey, look, I'll do a lease on your property for 5-7 years. This is what I'm going to pay you. Right.
Correct.
The property owner on one end. And then they come to you guys for the investment capital. What are they using that capital for? Furnishings, for staffing, for overhead? What are they using it for?
They don't come to us for anything. We buy the units. So they're sitting here saying, we need to invest in 30 units in this area, but we don't buy. We're ready here for a lease. So we purchase the units and provide it to them. They do all the improvements themselves. So it's almost like a bond. So that's where they're here ready to expand their market. And not just them, there's other companies like that will buy bulk. And they say, we just need units. Can you give us units? And then we go out, provide them, have our spread, and then ours it's almost like a bond, where we have a fixed amount and then they try to make it on the.
Do they come to you with the properties they want to buy?
We've been working with them for years. So yeah, we kind of have an idea, the criteria, because we help them source them initially. That's how this whole thing got started. They said, hey, if you can help us, we can't, we don't hire you as a broker, but you can help us go. And so we put together a couple of deals as a broker and didn't get paid, by the way, but just kind of like doing the long game. And so that's how we found the targets. And then it's kind of open because they're like, hey, we want to expand. If you can help, great. And again, and then when we call other vacation rental companies as well, you kind of find the hot spots and they say, yeah, we're good to go on that as well. So we prefer the master lease for a bunch of units, but we can even do onesies, twosies with the traditional, vacation rental one.
Right. Yeah, that's intriguing. So you guys go, you find the unit, you find a bunch of units, and then you go to this group and just say, hey guys, we want to sign a master lease with you. What are some of the things you like and don't like about the master lease program?
Well, what we do like about it is that, again, it's fixed, almost like a bond, to where you don't have to worry about vacancies. When we use a multifamily model and we're filling out the pro formas, it's vacancy rate 0, escalations built in already, long-term, management fee almost nil because they just take care of it all. So all those variables that come out of our model with the traditional multifamily go in are great. We like that. What we don't like too much is that, it adjusts to CPI, but with this guy Joe in there and the Fed printing, that's, I don't know with all you guys. I mean, I guess if you have annual leases in the multifamily space, you can raise rents, but boy, inflation just puts a crink in everything longer term, especially with these longer term leases. So that's the one piece where we have to just make sure we build in big enough of inflation escalators. And when they can manipulate that with CPI and things like that, it's almost like, grasping at ghosts, as you know, in your business as well.
Well, for sure. Is there a way moving forward to tie your leases to whatever the CPI number is, to where you say, hey, look, annual rent escalator isn't 2%. It is CPI plus, 50 bips. I mean, is there a way to do that?
Sure. Absolutely. If they'll agree to not having a cap, right? Because that's the thing, you have a cap because both sides are kind of getting squeezed. So it's like a dance, right? Like if you can do that without a cap or a limit per year, I mean, that's the ultimate idea. We haven't quite been able to negotiate that strongly yet. Perhaps you have, but to where, hey, if it goes up to 10%, then we're 10% plus, and that's the tough one. That's what we're all dealing with right now.
Yeah, and that's a super intriguing point because there's There's not a lot to be done with that in the long-term lease space. I mean, you look at this, industrial warehousing, it's a hot topic right now, but you're signing
Yeah.
five, you might not renew for 5 years. And it's like,
Right.
if we continue, which again, with the unprecedented printing of money, we continue doing this, and every year we're going up potentially seven, I think on a low end, 7%. I think they're getting lied
Yeah.
to when they say 6.7%. But on the low end, you're going up 7%. Gosh, I mean, compound that over a 5-year period, and suddenly that triple net lease, not so attractive anymore.
Right. And it's not unprecedented. I mean, we're a couple decades away now, but, if you got a guy like Paul Volcker back in the day that came in and squashed, for maybe our parents or grandparents that squashed inflation, I mean, they'll tell you stories of 18% and menus being on paper because you had to change. It's hard for us to imagine in the world that we've come up in. But I guess to the core of that, that's the number one thing that we're looking at, because when I say it's like a bond, if we're signing almost like a bond, well, bonds are what get crushed in an inflationary environment, right? You got a nice bond at 7% and interest rates are at 12, and you know what that does to the value of the bond or the de facto bond. So.
Yeah, absolutely. Absolutely. What have been some interesting things you've discovered in building a fund that brings in foreign investors? I can only imagine that there's quite a bit of paperwork and reporting.
Yeah. Well, we're just putting our toes in it right now. So we're not full board to where we've filed all the reports and then had to do it all. So right now we put it together with them. So our biggest thing is just to have the trust in initial phases, and this is where we are in ours. It's the trust of them to invest in our fund, and I don't know how, without working with people for years, you can have that. And again, maybe that's what you guys do a little better. Maybe we could talk offline to see that part, but these are guys that we've been working with on the brokerage side for years and years, and have years and years of relationships and unwinding and going over there. We lived over there for 3 months in France, to where most of our investors were, met with all of them. So that was a challenge that we overcame. And so I would be curious how to scale, when you talk about scaling, to that next level, to foreigners that really, without a relationship, I don't even know how that's possible, because we like to have a relationship with all of our people. And that's been the biggest thing I think that we've overcome, has been the most important to our fund.
Right. And talking about that fund, where there's some filing things up front that you found were different, where you said, hey, you know what, we're taking in foreign investors' money. This is, I mean, even all the way down to exchange rates. So let's, if somebody's sending you euros, right? Like, how does that process work?
We do it through, well, there's a couple companies that can do that. We use it's wise.com, which is a currency exchange function. So they actually use US bank coordinates for wiring. So we've done that where they put money in, you can switch it to US dollars. They're a currency exchange company, or Money Corp. Currencies Direct is another one. And that's what they do, is just they get the best rates, they'll go on the market and then bring it in to the US. So that's fairly simple. And we like to use it because it documents as well. Right? I don't want guys coming over with briefcases full of cash. You bring it in and do that. And then, and then the structure too, like with that US LLCs, another one we found when they were investing with those, if you're a foreigner, everything is great, Florida LLC, but there's an estate tax risk. So the government passed a law that said if you're a foreign owner of the Florida LLC and you pass away, there's a huge estate tax, and they would take almost the whole LLC, which again, doing this as a hack, when I first started, I didn't know. And then we started getting in with the attorneys and said, hey, you have to bounce it with a foreign company, and then it's all protected. So those are like the two big items, I think, the oopsies that maybe we made that we corrected and now have some expertise in, because like we were just doing it raw and hustling. And then now you get the attorneys and structure it correctly, and it's been great.
What about sending money back when it's time for money to go back to France? I mean, what are the...
Well, the same thing. The same thing applies to Wise. And that's where I alluded to earlier, like when you can send it to their, with US coordinates, a New York bank, it's in the wise.com, or Currency Direct for that matter, a bank account, and it sits there, they can convert it and bring it back. Now, our guys typically don't like to bring stuff back to Europe. Again, I mean, with the tax rates and everything. So we have it sitting in there. And when they've come here as well, we've opened local bank accounts, because they have to be present to sign. So for their LLC, they'll come over, we'll go in, present themselves in person, have a US LLC, US bank account. They can just have it here, and it's all legit. And I'm a signer on the account, and we just do it that way as well. So ideally they come over. If not, we let it season in that, wise.com account. And take a look. You can look it up at wise.com when you're offline and see what they're all about.
Right. That's tremendous. What are the return profiles when you guys are doing a master lease on 50 or 80 units? And you said those units are going to go Airbnb properties or some sort of short-term rental properties. Is that what you guys are working on right now?
Correct.
Yeah. So what's a return profile look like?
Well, we do it right at an 8% cap right off the get. So 8% pref, 8% cap rate. Like when we come in, or we won't do the deal. We have to come in and we have to have our basis at that because they're coming in on their side. They're going to sign at this amount, so we have to acquire there. So that's what it looks like. I mean, we do 8% pref, we split it 50-50 up to that, and we're looking at about 12 or 13% with appreciation when we exit. And but it's pretty straightforward in that regard. That's and for the foreigners as well. We like to do it at 8%. I know a lot of multifamily, I think right now is 6, maybe 7. So given the increased risk with this product that people aren't as familiar with, we like to go at 8. And then even if it's not for us, with as I mentioned, as we've been shopping these, and that's another thing with the fund model, you can't just blast it out. It's got to be like private, and that as a broker, that's like nails on the chalkboard for us. We like to scream from the rooftops. So one of the things we can do is when we broker these is sell it, even if say your group or a foreign group says, hey, I don't want to be in your fund, I just want to buy them ourselves. Well, then we can broker that deal and say, hey, because these people will sign with whoever gives them the 20 units, right? So that's more my wheelhouse. Like I can breathe easily with that. I can scream that from the rooftops. I can, do all the pro formas and everything. So that's kind of how it looks, either for an individual investor or with our fund.
Man, that's absolutely intriguing. I love how your business has grown and changed over the years, and just moving with your investors, and also just moving where the opportunity is. I think that's really, really intriguing. Thanks for taking the time to break down the master lease on us. And I mean, this is kind of a little bit different spin on the short-term rental game, but you're bringing in foreign investors, you're doing master leases. I mean, it's a different ball game, really, actually, entirely. So that's certainly unique, and I appreciate you taking the time to share with the details on that. Terry, let's jump here into the final 4 questions. The first one is this: what is one tool or resource you find you can't live without? Think digital software, something along those lines.
There's a program called minddomo.com, and it's mind mapping. And so I didn't realize I was a visual person until I got a hold of this. I have lists and I would stray. This is a mind map where you can connect all the dots. And we have since put our whole procedures manual into this visual representation of how our deal flow goes, how our thought process goes. It's visual. And so, yeah, if you're a person like me that's visual and likes conceptualizing it, and the checklist don't quite do it for you, this has been a game changer for us and our business as well, because everyone's on the same page.
And you said Mind, M-I-N-D, Domo, D-O-M-O?
Yes, all one word, minddomo.com.
Minddomo.com. Excellent. I look forward to checking that one out. That's really unique. If you could help the listeners avoid one mistake, what would it be, and how would you avoid it?
One mistake going in, when I came out of, I got my MBA at Ohio State, and I came out anti the man, if you will, right? So all the big companies and this and that, I said, oh, you're silly to do that. Let's roll up our sleeves and get in the weeds. I would say, especially if you're coming out and getting the business, don't be afraid to go with one of the big CBREs or some sort of big company like that, where you can learn the ropes and then you put your own spin on it. So that's, if I could go back and do it again, I'd maybe take some of their tools of the trade, because I see what they do, and it's good, but you can put your own twist on it without being a slave to that machine, when you come out.
Right. I love that. Question number 3, when it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
Right now, with what's going on with these COVID lockdowns and our takes on freedom, I have to admit, I'm a registered libertarian. So I just went to candidate training this weekend. And I think now, with everything we're doing, the biggest thing you can almost do is push back against these tyrants, because having lived in other countries around the world, like, this is recognizable as tyranny. Right. Fair enough. If you're an American that's had generations of relative peace, it's not recognizable. And you say, oh, they just want our safety. They're not letting us have meetings because they want us to be safe. So I don't necessarily believe that. So it's at that point where I think I almost have to get involved politically on the libertarian side to try to push back on this. Because if you don't push back, it just goes to your China. China's
right.
a great example. If you want to see the end game, go to China and see their social scores.
That is the end game. You're absolutely right. Terry, if our listeners want to get in touch with you, what is the best way to do that?
BuckeyeRealty.com. Go there. We've got a link to set up a call or talk about some of this stuff. And I'll put a link on there, buckeyerealty.com/Bricken. And then we can continue on with this specifically, what we're talking about here. That's going to have the video here that we're doing, a link to this podcast, and then also where we can talk specifically and elaborate a little more on what we covered here today specifically.
And fantastic. Thank you, Terry, for your time today. I do appreciate it.
No problem. Thank you. Great being here.